Hello, students. Very good morning. How are you all? So we are live here. Beta, before starting class, show me your presence. Everyone, show me your presence. Very good morning, Meghna, Nagarjun, Hitesh, Siddharth, Shriram, Ben Reddy, Janisha, Karthik, Shivaranjini, Gomati Krishnan, Rahul, Ramji, and rest of the students. And those also who are watching me at YouTube, a very good morning to all of you. Bachcho. Okay, we are starting today's session, and you are watching this session. In this session, the starting slide where I have already mentioned all the adjustments in the last class. Beta, we focus on the list of the adjustments. We have to do all the adjustment. Okay. Sir, yesterday notes are not available on BOS portal. Please upload it. Okay, Hiril, I will upload today. Don't worry. Okay. After after uh, after completing today's session, I will definitely upload. Okay, beta. Anyways, okay, let's start today's class. Okay, Sheena. Okay, I'm gonna revise the adjustment we did in the last class, and also I'm gonna practice with you all one question from the book in which you will find two or three adjustments. Okay, you don't worry. Now I'm gonna ask you for tell me everyone fast. Tell me everyone fast. What will be treatment if abnormal gain is there? So abnormal loss was minus figure and abnormal gain was plus figure. So although the steps will be same, only the effect and uneffect will be with the plus or minus figure, nothing else. So see, I'm gonna revise. Beta, for all star one adjustment, adjustment number one, dividend adjustment number two, bonus adjustment number 8, abnormal loss, the treatment is same. So we divided these things in some steps. Step number first we have to nullify the effect, whatever the effect is there in the financial statement. So first we have to analyze the profit of subsidiary company, because subsidiary company that may be revenue nature, but for us from our point of view we have to segregate the pre and post. Okay. So this segregation is only for consolidated financial statement in the books of holding company. So step number first, how holding company will segregate. First, step number first, holding company will see the pre and post in this manner. First step is there to unaffect whether it was bonus adjustment there in the profit and loss of subsidiary company, whether it was abnormal loss adjustment there in the subsidiary company, whether it was dividend adjustment there in the financial statement of subsidiary company. First, holding company will find out the profit before such effect. So if any such kind of effects are there in the financial statement of subsidiary company, first holding company will unaffect. So this is the step number one. Add the figure from where it was deducted, but for abnormal gain, what we will say? Less the figure from where in which it was added. So I would like to say step one is for unaffecting the things from the P&L, from the reserve surplus of subsidiary company. Step number one. Step number two is there. After removing the effect, step number two is there. Now Now, holding company is able to find out the profit or loss of subsidiary company before such adjustment effect. Now, that profit will be divided into two parts: capital profit, revenue profit, pre-acquisition profit, or post-acquisition profit. Okay, beta. Now, after that, step number 3, while while the correct profit is there with the correct segregation, now holding company will start to re-effect them according to their requirement, according to their law, according to their time of occurrence. For example, for abnormal loss and abnormal gain, what will be the base for effecting them? Of course, those are period based, in which period they were occurred. But for bonus purpose, first we utilize the capital profit until and unless otherwise specified. The profit was utilized first as per prudence capital profit. So first, that will be deducted from the pre-acquisition profit. In the case of dividend, it depends on the dividend. We already discussed in the last class to which period it belongs, or otherwise question will specify clearly that that has been paid from pre-acquisition profit. Then it doesn't matter to you whether it was for current or previous period. If question is saying that that was distributed from the pre-acquisition, then it has to be re-effect in the pre-acquisition part. So beta, it totally depends on two things. One thing, if question says, then okay, as per do as per question. Question says re-effect from pre, okay, then pre. Re-effect from post, okay, then post. If question doesn't say, then apply your concept of dividend adjustment, whatever you have learned in the law, that profit for that year must be utilized to which dividend belongs. Number one. If that profit is not sufficient, only then capital profits are used. You already know the things. I don't know how many of you have revised today the concept of company law, which whatever I was informed you, I informed you in the last class that you must revise. Anyways, now after effecting this, now the analysis of profit, in the analysis of profit, the profit will be distributed in the same way, holding and subsidy, and according to that, those will be transferred. Also, one thing I discussed with you, that is that other side of dividend is receiver side. In case of receiver side, what I told you in the end of the lecture, I told you revise last 15 minutes lecture from YouTube at least. If it was pre-acquisition dividend, because as per AS 13 in the standalone financial statement of holding company, investment account must be adjusted from pre-acquisition dividend, that is the recovery of cost. So if dividend was distributed out of analysis profit of pre-acquisition, that means it becomes for holding company pre-acquisition dividend. In that case, bank account debit to investment. But if that was distributed effective from the post-acquisition, then it becomes revenue nature. In that case, income must be credited. Okay, beta. Now, one more thing is there. If in the question it is not clear that the proper accounting was done, we always pre-assume that the accountant of holding company has done mistake. He has done the treatment in the same way as we do the treatment in case of post acquisition. Means he has transferred all the amount of dividend received, dividend income to P&L. But this mistake is pre-assumed in the books of holding company, and we have to rectify that mistake. That we have to remove from profit and loss, because that income doesn't belong to revenue nature for us, and that has to be adjusted in the investment account, because that is the recovery of cost. Please let me know till this. Okay, here a little bit I will do that, don't worry. Okay, now I'm gonna discuss with you all one concept more. After that, I will take a question in which you will find all these adjustments in a single question. Okay, beta. So please let me know. Okay. Please let me know till this. Okay. Although it was okay in the last year, but still I have the habit of taking the okay from you all at each and every step. So please let me know, everyone. Revision done. Now I'm gonna do another adjustment, and that adjustment is revaluation adjustment. Give this adjustment star number 2. Give this adjustment number star number 2. If I'm gonna categorize the adjustment separately, it means those are separately important. Usually they comes with independent question. Okay, beta, please be focused. And in practical life, you will find always there is a holding company, subsidiary company, etc., etc. Oh, Rahul is saying after question it will be commented. Okay, beta. Yes, definitely. I was asking for that in revision you are okay or no. After question again, new okay will be asked. Okay, beta. So see, this is the start to adjustment, that is revaluation of assets. Very easy, sir. Very easy, sir. Why? Why you are saying? Because that is very easy, sir. How you are saying? Please explain us first. Okay, beta. See, in the case of revaluation of assets, now I'm gonna present one more graph. Please give a heading: revaluation of assets. Beta, although it must be revaluation of assets and liabilities, but still, usually in your exam, up to the inter level, the question belongs to such. Anyways, now I'm gonna wait a minute. I'm gonna copy the concept I have already written there. Hmm, wait a minute. Wait a minute. Yes. Just strengthen. Okay. Okay. Let's do in this way. So I'm writing here, beta. Please do noting. Yes. Step number first. Beta first. Okay. Let's first understand the concept. Beta, see, there is there is subsidiary companies years graph. Okay, beta. This is what? This is the CBS consolidated balance sheet date. CBS date, at which date consolidation is being done. At this date, we are consolidating the subsidiaries financial statement with the holding company's financial statement. Okay. And this is the year start date. Year start date. As you know, April 1st, 2021. Yes, sir. Now see, at which date holding company acquired the control. This is the date. This is the date of acquisition. You can also prepare graph simultaneously because it's not so typical concept. It's very easy concept. Okay. Now see, in case of holding company is investing, in case holding company is investing in the subsidiary company share, how they decide, how they usually decide? Tell me everyone. They decide based on the realizable market value or based on the book value. How they decide to invest in any other financial statement, how we should decide in the same way holding company has definitely decided. While you will be investing in the shares of another company, then you invest based on market value or based on book value. I am waiting. If you are buying any assets, then you analyze the market value of the assets or book value in the books of vendor. Everyone, very very good, very good answer. Of course, this is the genuine and common answer, common sense answer. I am still waiting for other student to answer, even if only two students have answered. Beta, while you will be investing in any assets, how you will be investing based on the factor, based on the market value of that assets or based on the book value of that assets? Of course, it is based on the market value, no doubt. See, holding company invested in the subsidiary companies balance sheet based on the market value. Beta, but on the date of acquisition, in the balance sheet of subsidiary company, is there any updation in the financial statement of subsidiary company regarding the market value? Of course not. Of course not. In the balance sheet of a subsidiary company, suppose on the date of acquisition, book value is 1 lakh. But for holding company, it seems it is like market value, it is having market value 1,20,000. In that case, you will find one thing. In the books of subsidiary company, even though the fixed assets has not been updated with 1,20,000, but still that is having market value. And you know, net assets is calculated based on the market value. You have already learned in other chapter, amalgamation of companies, and any other chapter also. And if even if you have not yet learned, I'm gonna tell you. Wait a minute. But if anything, if any investment is being done in the net assets of other company, then that net asset is firstly calculated, firstly analyzed, firstly recalculated in the working note based on the market value of that company. How much assets will be realizable, how much liability will be payable. The balance thing is there, that is called net assets. But that calculation is not based on the book value, that is done on the market value of that company's balance sheet. Okay, beta. Now, so you will be able to find out the net assets of other company based on market value. And here we are, the holding company, we are comparing our investment done with the net assets we acquired. You know, if from the balance sheet we are working in our in our working note number 1, investment minus net assets acquired, and minority also net assets of those, beta, that net assets comes out on the basis of book value. And until and unless this revaluation adjustment has been effective. Now we have to give effect to the market value of these assets also. So how you will give effect? Sir, it is very simple. This is the beta, this is pre-acquisition, no doubt. this is post-acquisition, no doubt. And this is balance sheet date, no doubt. Now the question is regarding the 20,000 effect, because in the books already 1 lakh is there. So the difference of 20,000 has not yet been effected because of book value. Okay, beta? Yes, beta Sheila. Anyways, now coming to the main point of the question. Beta, this revaluation, this is what? This is revaluation profit. This is revaluation. If this revaluation is done in the balance sheet, then this will be called revaluation profit. You know, in case of admission, retirement, death, very good. Bandit is saying correct. Sir, open revaluation account, very good. But, beta, this is not the way to do the adjustment. Wait a minute. For us, all the profits belonging to subsidiary, that has to be analyzed in the pre and post, and according to that we have to post in our working note. Okay, beta. So now the question is regarding 20,000. What will be the 20,000 treatment? This is the adjustment which we are learning here. So based on the market value, we have to update this 20,000 also. So if this 20,000 has been updated, what could be the profit? Beta, of course, this is the profit on the date of acquisition. It means such profit belongs to such profit belongs to such profit belongs to such profit belongs to pre-acquisition period. This 20,000 belongs to pre-acquisition period. So if, as you know, in case of partnership, you have also done the revaluation profit, you have updated the capital there. Yes, sir. But in the case of company, in the balance sheet, the capital is kept separate. The profit is updated only in the reserve and surplus. Yes. And in which reserve and surplus you will add? Of course, sir, it belongs to pre. So we will add this in the pre-acquisition profit. In this way, what you will do, you will give credit to P&L, credit to pre-acquisition profits. Okay, madam? Okay. And on the date of acquisition, we have paid for that also. Yes, this is also our pre-acquisition profit. So that's the reason this will be compared. In this way, this will be affected as like pre-acquisition profit. Now, one more thing is there. Because of this updation, the fixed assets must be updated. Yes. The debit balance must be updated. Yes. In the consolidated balance sheet, you will do first entry for this as fixed assets account debit to revaluation profit, or revaluation profit, that is beta in which that is in pre-acquisition profit, of course. Okay, beta. So you will do this thing. Sir, in this way, fixed assets will have 20,000 more. Yes. In that case, what about the depreciation of such additional? And if this could have been updated in the balance sheet, you are saying that 20,000 will be more for fixed assets also and also for the profit. Yes. But where will depreciation affect? Yes, beta. Since if it is a depreciable assets, then we have also requirement to give effect for the depreciation part only for the post, because on the date of acquisition we are analyzing, that means that 20,000 is being addition to the fixed assets on that date. Okay, beta. So depreciation will be there. Depreciation on such revalued part will be calculated, and where will that depreciation be posted, in the pre or post? Of course, the assets was being utilized in the post. So depreciation on revalued part must be reduced from the post acquisition profit. This is the adjustment. So in partnership also, in case of fixed assets, fixed capital method is followed by the firm, then the revaluation profit or loss is adjusted. But a P&L account note, in that case, beta, that to the that is P&L account balance sheet. In case of fluctuation method, only adjustment in the beta. Beta, I have contradiction regarding that. Okay, beta, Shriram, I am not giving any comment on that point. According to me, that is wrong. That must be adjusted in the capital. Okay, we will not discuss in the partnership. Okay, beta, we are discussing here. So, see. So, let me know first. Are you clear with this adjustment? Suppose there is a depreciation rate. Suppose there is depreciation rate of 10% per annum. And this is the date 1/4/2021, and this is date 31st March 2022. Beta, how much depreciation is there? So that is 20,000 multiplied by 10% multiplied by, sir, what is the date of acquisition? Beta, suppose April, May, June, July, August, September. This is 1st September. It means 6 months are here and 6 months are there. So based on that, multiplied by 6 divided by 12. So that will be 1000 rupees for depreciation. So further updation in the fixed assets will be 19,000, and post acquisition profit will be reduced with this amount. Number 2 entry, P&L, in which post acquisition account debit to fixed assets. How easy this is? Really very easy. Have you noted, beta, how depreciation in post? I did not understand that, sir. I will be in pre, right, sir? No, beta, because the assets is being used in the post acquisition, beta. We were not the owner in the post pre acquisition. Okay, beta. So according to us, that expense or loss belongs to post acquisition, because the assets 20,000 will be utilized. The 20,000 addition will be utilized in the post acquisition period, and that must be shifted to the post acquisition, beta. Okay, beta. Siddharth. Okay, now the things are very easy. I am summarizing by giving you some steps how you will how you should do these things in the step by step. Beta, please note down. I am summarizing, beta. I am giving you some steps. Please note down. A point. I am writing here. Please note down, everyone. April, May, June, July, August. Oh, yes, you are right, beta. Okay, give change this date. October 1st. Okay, beta. Yes, you are right. Change this date. That is October 1st. Yes. Otherwise, there will be 5 months. Yes, October 1st. Yes, you are right, beta. Very good, Sridham. On 1 lakh, how depreciation is transferred, beta, that has already been transferred, because in the examination, in our question, we are giving this dated balance sheet, in which already 1 lakh was being affected, but the additional 20,000 was not being in effect, and we have to consider that point also. That's the adjustment. Okay, beta, Namrata. 1 lakh is already there in the balance sheet provided to us at this date, subsidiary company's balance sheet. But we have to recalculate back this 1 lakh. Okay, beta? We will not be available easily 1 lakh. 1 lakh we have to calculate the book value on the date of acquisition, because we will be able to give given by the question will give us the balance sheet as on 31st March 2022. We have to add back the depreciation of that period, so that we could be able to find out the book value of 1 lakh. After that, we could be able to compare. Okay, beta, market value will be definitely given by question, and if nothing given, then market value given belongs to the date of acquisition. Remember this. Okay, beta. Now please note down the steps. Revaluation is considered on the date of acquisition. Number 1. Yes, beta, Namrata. Now I'm answering the query of Shriram. Shriram, beta, the assets additional 20,000 belongs to use in the post acquisition period. So its depreciation will also be shifted to the deducted to the from the profit of post acquisition. Other dates are to other dated is to be ignored in. But if question is saying your revaluation of different date, then you have to be focused only on the date of acquisition revaluation. Yeah, there may be case, beta, that the reverse treatment will be there. There will be saving on depreciation, Namrata. Very good, very good. Your doubts are clearly showing that you are depth in the you are in the depth way in the concept. Beta, please note down everyone. Most of the query will be solved by writing. Revaluation profit and loss is of capital in nature. Of course, capital nature profits belongs to pre. Hence, this profit and loss should be adjusted in pre-acquisition. Shriram, your doubt is okay? Profits. See how to calculate see. In this way, you have to calculate first. You have to calculate the revaluation, profit or loss. Beta, loss may be there. Yes, there may be case. Very good, Amrita. There may be case the market value is less than the book value. So I am considering here both of both of the concept by writing in the tabular form. Okay, beta. Don't worry. You will be preparing the notes in the way you will be revising just before the exam. So if revaluation profit is there, if revaluation loss is there, okay, beta. Beta, book value, of course, book value on DOA, book value. I'm gonna figurize this concept so that you can be able to revise the concept with some figures. Book value on the date of asset, book value on date of acquisition, sorry, asset name less. Wait a minute. I'm gonna change this. That is market value on the date of assets. Okay, beta. Market value on the date of assets. Market value on the date of acquisition. Sorry. So suppose this is 1,20,000 as per our earlier example we discussed, minus book value on date of acquisition. Of course, we have to find out that by the way the question is giving us the depreciation rate, something like that. So we have to find out it first. While we will be comparing these things, then there will be either capital profit or capital loss, capital nature loss, capital nature profit or capital nature loss. Suppose book value is there, that is 1 lakh. Of course, the profit will be there. Capital nature profit will be there. 20,000 in the earlier example we discussed. I'm gonna do first profit part so that there may not be any confusion. After that, I will go for the revaluation loss part. Don't worry, but that will be systematically, okay, but step by step. Now, after that, How we should do? This should be added to pre-acquisition profit, of course, in analysis of profit. Okay, beta. Next one is the depreciation part of revaluation. Give a heading depreciation oblique, or you can say give this heading in this manner: additional depreciation slash saving in depreciation in post acquisition period only. Okay, same way as we did in the above chart, we are classifying here in case of profit, in case of loss, how those are to be classified. So I'm going to copy from here. In the case of revaluation profit, there will be a case of additional depreciation. So additional depreciation will be only in the case there is a revaluation profit. Wait a minute, beta. Coming to that, Hiral, step by step. First, we will discuss only about profit, and while we will be discussing about the loss, then there will be case of saving in depreciation. Wait a minute. Okay, beta. So additional depreciation will come only in the case while there is a revaluation profit. So depreciation such belongs such depreciation belongs to post acquisition period only. Okay, beta. Wait a minute. Come on. कहाँ गए? Yes. See, in this case, we have to adjust in post acquisition profit, or you can say reduce. Whether it would be much better, write a word reduce such depreciation in post acquisition profit and loss only. Okay, beta. So this was the depreciable part. Okay, beta. Suppose suppose 6 month in post. In that case, what will be your amount of depreciation? 20,000 multiplied by, and depreciation 10% per annum. So multiplied by 10% per annum, multiplied by 6 divided by 12, that comes out 1,000 rupees. So such depreciation will be reduced from the post acquisition part only. Let me know first. Additional depreciation on revalued part, is this okay or no? because I'm going to take a question in which you will find dividend adjustment and also the revaluation adjustment. Tell me fast, everyone. Tell me fast. I'm still waiting. Addition, deduction, clear, sir? Clear. Okay. Okay. Only 3 students answered. Benedict answers, Siddharth answer, Hitesh answer. Where are all rest of the students? Namrata, Shriram, and all the students. Beta, tell me fast, everyone. Meghna, Nagarjun, Hitesh, Siddharth, Shriram, Benedict, Janisha, Karthik, Shivranjani, Vameti Krishnan, Rahul, Namrata, Pooja, everyone. Okay, done. Now, another part is there, opposite part. Suppose market value is not always on the upper side. Sometimes it happens the market values on the lower side. Okay, beta. So if market value is there, that is, suppose that is, beta, book value will not be changed. Of course, book value will be same if we calculate in the same manner. Okay, market value, suppose there is 95,000. It means there will be a capital loss of rupees 5,000, and of course such loss will be adjusted in the pre-acquisition. Okay, beta, validity. So pre-acquisition loss must be adjusted in the pre-acquisition profit and loss. So beta, please write down less, or you can say reduce such from pre-acquisition profit or loss in analysis of profit. In analysis of profit. This is having an opposite treatment. In the book value, assets is more. It means in the post-acquisition period, subsidiary has charged more depreciation. And if we are reducing that value, it means in the post-acquisition, the depreciation of such revalued additional part must not be charged in the profit belongs to post-acquisition. It means there will be less depreciation. So that is called saving of depreciation. This is from holding consolidated point of view. There must be saving of depreciation because the profit or loss account given to us in the subsidiary balance sheet is at year end. At year end, only we have the tension, holding has the tension to consolidate, not subsidiary. Subsidiary is doing as per their books. But we have to consolidate on the date of acquisition and on the balance sheet date. So we have to reconsider the thing only. Okay, beta, not the subsidy. Subsidy is continuing with the normal book value in their separate financial statement. But in the separate financial statement, we are also recording the investment account. But in the consolidated financial statement, we are to analyze from the market point of view. So we are considering that saving of depreciation is there on 5,000. Such saving means reversal of depreciation, you can say, or you can say saving of depreciation, any word you may use. You can also use reversal of depreciation. Tell me which word is more suitable to you, reversal of depreciation or saving of depreciation, everyone. Tell me fast. We are considering the things based on the market value, so we have to consider accordingly. Let me know which word is more suitable, in which gives you more clarity, reversal of depreciation or saving of depreciation. I will use that word. Everyone, answer me first. I will use that word, reversal. Okay, another is saying saving. Hiral Prakash, sir, now the saving or depreciation is crystal clear, understand. Okay, beta Hiral. So reversal or saving. Okay. So I'm gonna use. Okay, give me vote. Reversal must be used or saving must be used. Give me vote fast. I will count which is more. Only that will be used in the class. This is the way for holding company. This is the way to decide in the general meeting. YouTube student, you can also give uh, vote by coming to the IC application. And if you are seriously liking the lecture, then please give me a like at YouTube, beta, and you can also share. Okay, beta. I am still waiting. I am still waiting. Reversal or redemption saving. So reversal 1 2, saving 1 2 3. Okay. Reversal 10 more. It is he is very naughty. Siddharth is saying reversal 10 more. Very good. Anyways, I am seeing, I am able to see approximately equally votes are there. So I am gonna use this word. Okay, beta. I'm gonna use this word, reversal of depreciation. Okay, so that will be more clear to you, since I have got the votes are more for reversal of depreciation. So such reversal belongs to post acquisition period only, because that additional assets or additional saving was utilized in the next period only. Next, now what should I do? Reduce or add? Of course. Rahul is very naughty. He will definitely go to the politics. He is saying, sir, reverse saving. Use the word reverse saving. Very good, Rahul. I am seriously giving a salute to you, beta. You will be definitely in the politics, and you will be definitely on the top of the politics. Anyways, he will never disappoint to anyone. He will always try to satisfy everyone. Very good, Rahul. Uh, Anyways, so reduce instead of reduce. What we shall use? Add in post acquisition profit or loss only. So, beta, on such 5,000, there will be 10% per annum, and 6 months we are taking pre-post period. In that case, that is 250 rupees that has to be adjusted in the post acquisition period profit or loss. Anyways, now we are going to solve a question. But before going to question, okay, I will go to Rahul. Bandedi is like very good. Anyways, I am not taking any word related to politics, because this is the class and this is temple, I think. Anyways, now beta, please read the question, and question is there at page number 6.61. As page number 6.61. Page number 6.61. Come on, everyone. Question number, problem number 17 in my PDF, problem number 17. So, beta ji, this is the question. Please read this question carefully. I will give you, I want to give you 5 minutes break, because in the fresh mind we shall do. Okay, beta. Let's take 5 minutes break, and those who doesn't want 5 minute break, they can utilize the time by solving the question in advance. they can use your time effectively. Beta, I'm gonna give you a break so that there may be a pause, because before taking a pause, if we shall do, then that may create some botherness in the mind. Okay, the tension in mind. Anyways, so Nisarji, please give a break for 5 minutes. Nisarji, technical team, please give a break. Okay, for the time being, during the break, I'm showing you the slide. हाँ जी बच्चों, show me your presence बच्चों. Everyone, show me your presence that you are back after a break. This is the way to study. While you will be revising your chapters, then you must also take the break. Okay, beta. So, beta, first please do this thing. Please prepare a format. Okay, beta. So, first read this question. There is company that is A limited and B limited. Okay, so we will not use the word A limited, sorry, S limited or S limited. So we shall use the word A limited. So consolidated balance sheet of A limited with B limited. And what is the date? Balance sheet date is 31st December 2021. Okay, it is 31st December, not 31st March. 31st December 2021. Okay, beta. Back. We are back. So beta. Now we have already prepared a format, and there must be one more thing, that is minority interest. We will note down here. Wait a minute. So we have to change some words also in this format. Already we have prepared, that is A limited and B limited. Rather, it will be much better to prepare notes to accounts instead of writing here. Okay, beta. Since these are having adjustment. One of the student was also saying, sir, when we have to prepare the notes to account, beta, this is the time. In this type of question, you need to prepare notes to accounts. Okay, beta. So there will be some reference regarding the notes also, and here also we have to remove these things. There will also be reference for the current assets. So now we are working with the notes, working note. Yes, penalty. Those are very, very naughty. Very, very naughty. Anyways, A limited and analysis profit of B limited, not S limited. Okay, beta. Here we are preparing. Beta, working note should be prepared after notes to accounts. Since I have already prepared them, okay, do just one thing. I am shifting them. Wait a minute. And notes, the working notes should be prepared after the notes to accounts. Okay, beta. So here we need to prepare notes to accounts, especially for these things. One is shareholder funds. So I am also removing from here the share capital reserve and surplus. No, 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 no. A. Shareholder funds is there, and application of liabilities, application money pending allotment is also there. There will be another point that will be minority interest, and this will be numbered as D. This will be numbered as E. There will be notes to account for such also. Okay, beta. So now the things are ready. So I'm gonna give here note number also. Okay, beta. In the case of shareholder funds, this is note number 1. This is note number 1. Okay, and this is of course not having any note number because we will never find application money pending the allotment, and there will be working note, not notes to accounts. Okay, beta. And in the case of non-current liabilities and provisions, since we are not having any non-current liabilities here, so in the case of current liabilities and provision, we shall give here working note number, sorry, notes account number 2. I hope you are also noting the same. Better please prepare same notes to accounts. That will be much better for all of us. Third and fourth. Third and fourth. Now I'm also preparing here. I'm also preparing here notes to accounts. I think this must be shifted. Control X. Wait a minute. Wait a minute. So here we are for notes to accounts also. So give a heading here below the balance sheet, or you can see on the next page. You must give notes to accounts separately. Give a heading notes to accounts, and there note number 1, that is shareholders funds. And of course, even though figure is not there for the last year, but still we have to prepare in the in both of the columns. Even if you are giving dash there, by showing you that not applicable, not available. Okay. Here, what you do here, what you will write here, there is share capital, and of course there is also reserves and surplus. Okay, beta. In case of reserve and surplus, in this we are having both reserves and surplus. In the case of reserve and surplus, we are having both general reserve and profit and loss. So definitely there will be general reserve and profit and loss. So better please note down carefully, because you have to prepare the things in the very effective manner. Okay. So please do give heading here general reserve, in which you will be having the consolidated reserve and surplus, or you can say instead of giving heading here, you can give this thing in this way. Give a working note reference. Working note number 3. Consolidated reserve and surplus. In the case of consolidated reserve and surplus, you are having working note number 3. So give reference to working note. Instead of writing here all the things, you will be preparing the working notes. So give reference there and prepare in this way. This is our notes to accounts number 1, shareholder funds. And notes to accounts number 2 is there, that belongs to in this question non current liability. Note number 2, non. Beta there is working note and provision for minority. Okay, Namrata. So, beta please do the solution. Please solve the question always with presentation. How you must present your answer in exam in the same way you must practice in the class. So non-current liabilities and provisions are also there. And what the things we are having in non-current liabilities and provision? See, there is okay. Non-current liabilities are not there. Only the current liabilities are there. Okay, beta. So please change the word current liabilities provision are there because we have mentioned the current liabilities and provision, not the non-current. Okay, beta. There is no note for non-current. So in this case, we are having short-term borrowings. Okay, beta. Bank overdraft. So we must write in the same way. These are short-term borrowings. You know, in case of schedule third, first heading is there, that is trade payable. And in the question, we are also having the trade payable. So give heading accordingly. That will be much better. Of course, H, sorry, not H, A limited and B limited. Okay, both will be added this way. And after that, there is another heading that is bank overdraft. Sir, yeah. How do we know how many working notes will come in advance? But it totally depends on your question practice. You will find, you will first read the question and find the things there. How many things are there? And accordingly, you can classify the things. Okay, beta? See, there are only these things. You can read easily. Short-term borrowings, and trade payables are also there in the balance sheet. You know, both of these have been merged. While you will be reading the question, then definitely you will be able to find out the things in easy manner. Don't worry. Only the question reading practice matters. Next one is after that we have also given a number to non-current assets. Yes, that is note number 3. That is note number 3. That is non-current assets in which you are having both the things. You are having both the things. Property, plant and equipment, number 1, for tangible assets. And if there is any goodwill, then that has to be posted here. But first check how many non-current assets are there. Land and building, and property, plant and equipment. And as you know, there is also a case here for revaluation. Revaluation, the plant and machinery which stood this one at January 1st, considered worth rupees this one on 1st July. Okay. So there is a adjustment in the plant and machinery. So we shall mention here accordingly. Okay, beta. So we are writing here plant and machinery first. Plant and machinery first. In this case, in this case, in the case of plant and machinery, you know there are two things: A limited and B limited. While you will be adding both the figures, after that you will find the total figure, and from where you have to adjust here the revaluation, either profit or loss, whatever the figure will be there, that will be adjusted, and also the additional part there that has to be adjusted here. Okay, beta. I am writing here additional depreciation or selling, whatever the things may be there. Okay, beta. I don't know. I will solve with you all. After the plant and machinery, you are having another head, land and building. Land and building. Okay. In case of land and building, another is there any revelation? No. A limited and B limited. Okay. Now after adding the things, there will be the amount under head property, plant and equipment. Okay, beta. Property, plant and equipment will come out after this total. So now what you will do here, beta? After that, you will do the same thing for intangible assets. If intangible assets is there, please check in the question, is there any intangible assets? Is there any intangible assets? No. Still, we have left some space. If such comes out from the calculation of working note, then we can post easily here. Anyways, now next working note, next notes to accounts is for current assets. Current assets, past year figure and current year figure. So give a heading there, note number 4. I am discussing with you all, so that's the reason it is taking a time. But I want you all to do the things in the best presentable manner. Okay, beta. So here, what are the heads in the current assets? Inventory, trade receivable, and cash and cash equivalent. Okay, give the headings. Same heading there. Inventory, then trade receivable, and then last one is cash and cash equivalent. And always there is a limited, always there is a limited, and of course delimited. Okay, beta, and then we shall be able to do total. So this is the presentable format which we must follow. Although it is taking time because I am discussing with you. Okay, beta, while you will be solving independently without discussion, then definitely you will be solving the same in very less time. Anyways, now start the consolidation. How you will start the consolidation? Line by line. Starting the consolidation line by line. So take the asset by assets and liability by liability. So I am starting the consolidation. How we must do in exam? Line by line means share capital. First, you start from the share capital. Okay, where the share capital must be posted in the shareholder fund. Only the holding company capital will be posted there. Okay, beta. Don't post all the capital there. Okay, beta. A limited is there. Only the its share capital, that is rupees 5 lakh, that must be posted here. Okay. And what about the share capital of B limited? See, in the case of this, since you have already read the chapter, so read the question. So I am taking the advantage that you know how much percentage of holding we are having here. So there is 80%. How that was decided? Let us see. Share capital of the subsidiary company is having 2000 shares, and we are having in investment how many shares we are having? We have purchased the investment, and that is okay, this one. A Limited acquired 1600 ordinary shares. Okay, beta, on 1st July. It means that is 80% shares we are having. How? The total shares are 2000. Out of such 2000, we are having 1600. That is, it becomes 80%. So 80% share capital will be posted here. What is the amount of share capital to be posted here? Out of 2 lakh, 80%. 80% will be posted here. That is 1,60,000, of course. And what about the rest 20%? That rest 20% share capital will be posted to the minority interest. Okay, beta, 20%. Uh, that is 40,000. That is 40,000. Yes, he did pass. Very good. Anyways, now we have posted share capital. Please highlight that we have posted that. Okay. Now reserve and surplus is there, beta. Now we have to be focused on the reserve and surplus. First, we have to go to the working note. So first, you have posted all the share capital. Yes, we have done. Now we are on reserve and surplus part. First, post holding companies part. That is to be shifted to consolidated reserve and surplus. No doubt. Please write down here general reserve. General reserve. General reserve of both. General reserve of both. H limited. Sorry, actually A limited. A limited and then B limited. But you know, from B limited you will get the figure here from post acquisition only, not from pre acquisition. Okay, the reserve and surplus may be there in post or pre. Pre, that will be posted to the consolidated. Sorry, that will be posted to the working note number 1, cost of control. But post period general reserve will be posted here. Okay, beta. Now another thing is there, that is what is the heading? It is profit and loss. Profit and loss. Please do practice with me. Next one is this one. Okay, ji. A limited and B limited. From B limited, profit and loss in post acquisition, only that will be posted here. Okay, and so first we should post holding company part, that is 2,40,000 and 5,700. 2,40,000 and another is, that is 57,200. That is 57,200. Okay, beta, 57,200. Now, what about the profit or loss or reserve and surplus of subsidiary company, that is B limited here? So we have to prepare column for such in both post and pre and post, as we did in the last class. Okay, beta. General reserve, profit and loss, profit and loss, profit and loss, okay, beta. Both has to be classified according to their requirement. So first we shall mention there the closing balance in the analysis of profit. Subsidiary companies balances are for general reserve on the at the date of balance sheet. What is the balance sheet date? That is 31st December 2021. 31st December 2021, and general reserve and P&L balances are for subsidiary company. Those are this one, 1 lakh and 1 lakh for general reserve. And what about profit and loss? That is 82,000. 82,000. Give dash to other part. So moving to the next part of the question, that is after consolidation of, after shifting the figures from the share capital and reserve surplus, now moving to next part, that is, remember, line by line. Now we are moving to current liabilities part, trade paper, short term borrowings. Okay, beta. So please post there in the notes to accounts, trade paper and short term borrowings. So A limited. So in case of trade paper, A limited having 47,100 rupees, and B limited is having 17,400. Okay, beta, please do a total also. This will save your time. Do a total also. 47,100 plus 17,400, that is 64,500. Beta, in case of bank overdraft, you are having short-term borrowings only of A limited. So you have posted these also now. Okay, beta. 80,000 is having A limited is having 80,000. There is no bank overdraft in balance sheet of B limited. Very, very easy, very, very easy, very, very easy. So you can do total also here. 144,500. Okay, okay. Now moving to the next part of the question, that is now we have completed the liability side, equities and liability side. Now we are moving to the asset side. Asset side, in case of asset side, you are doing the question with non-current assets. First, we are considering property, plant and equipment. So there is some notes to accounts. Okay, beta. So you are having property, plant and equipment with some notes, and investments are also there. First, we have to consider property, plant and equipment. So we have to post these things: land and building of holding and subsidiary. Okay, land and building is there. Moving to the non-current assets, land and building are there For holding company, land and building, that is 1,50,000. And for subsidiary company, it is 1,80,000. Very, very good, everyone. You all are doing great. After the land and building, you have to post the plant and machinery figure. Since you have already made a space for the revaluation part, you need not to take tension. So 2,40,000 and 1,35,000. So 3,75,000 is the total of this figure. Okay, beta. But you do not, please don't post to outer column. We have some adjustments to do later on in this figure. Okay, beta. So do a total here. 3,75,000 is there, and after that we shall do adjustment regarding the revaluation and the additional part. Okay, beta. Now moving to the next part of the question. Now we are moving to the non-current investment. You know, non-current investment, you are having the investment in B Limited, and where you have to post it in the working note. Okay, beta, working note number 1. So what is the amount of investment? Check 3,40,000. Yes, 3,40,000 we have to post here. That is 3,40,000. Now, after that, we are moving to the next part of the question. So we have completed this part and this part also. Now moving to the current assets part, that is inventories of both will be clubbed, trade receivable both will be clubbed, and cash equivalent of both will be clubbed. Then we shall be able to complete the notes to accounts. Okay, let's do it in the notes to accounts. A Limited is having 1,20,000 as inventory and 36,400 as inventory B Limited. So how much is total? 1,56,400. For trade receivable in case of A Limited, those are 59,800. 40,000 is here, and then what will be the total figure? 99,800. Only those will be enjoying which are solving the question with me. Beta, YouTube students, if you are also enjoying, then you can give likes and sharing there. Okay. Okay, show me your presence that you all are not sleeping, you all are not busy with parathas, etc. Everyone. So where are you all? Show me your presence. Are you there? Or you have taken some more parathas and you are sleeping? Tell me, everyone. I'm not sleeping. Rahul is saying, Rahul is giving a symbol of weeping. Anyways, so better do a total. You don't need to post anything further here. So you can do total. 156,400 plus 99,800 plus 22,500. That is 278,700. Only 2% are not sleeping. Benedict and Rahul. Oh, Hiral Prakash Singh, yes, sir. Sir, I am very busy. Siddharth is saying I am very busy. Not with dosa, with this sum, sir. Okay, very good, Siddharth. Okay, Rahul, Hitesh, Prabhas, Pooja. Please reduce your speed a little bit, sir. Okay, beta. That's the thing I want from you. Give me your specifications, sir. Please reduce some speed or please increase some speed. So I am slow. Don't worry. In my class, most of the person says, "Sir, we are just about to sleep. Please increase some speed." Only you are the one, beta Pooja, which is saying that please reduce speed. Yeah, I will definitely reduce. Don't worry. We are here solving the question with you, sir. Okay, Namrata beta. Okay. So everyone, now moving to the next part of the question, and we have done almost the things here. Now we are moving to the adjustment part. Okay. Siddharth Singh sir, I want to say please increase the speed, sir, please. No, beta, not possible. I consider those students because the person who are already on speed, they can easily understand. But if uh, uh, any student is like me, which are in the requirement of less speed, so I will also consider those beta. Okay, beta, that is satisfied to all students. Already you are on a riding horse, you are already satisfied with this speed, but I also want to satisfy those person which are feeling higher speed. Okay, beta. Anyways, now please focus on the question. We discuss the thing just to divert your mind, nothing else, so that you can be able to get some rest. So, beta, profit and loss account of subsidiary company showed a credit balance 38,000 on January 1st, 2021. Wait a minute. Wait a minute. Wait a minute. So I'm going to prepare here a graph. Everyone, please prepare a graph that will be more helpful for you. You can give a separate working note there, working note number that. Okay. Okay, let's prepare this in a separate working note. That is working note number 5. Okay, that is working note number 5. That is working note number 5. Okay, beta Rahul. Thank you. Working note number 5. Please put your pen down and enjoy the graph. That will give you more and more clarity since we are having two kind of adjustments here. You can prepare graph later on from the YouTube videos. Please be focused, more focused on the question. Now, beta, we are having a calendar year here, 2021. Yes, sir. That means the starting date is January 1st and ending date is 31st December 2021, which has already been mentioned by the question. Now, we are having the balances. First, please mention the date of acquisition here. A Limited acquired 1600 shares on which date? July 1st, 2021. Okay. So approximately it is like middle. It is middle, of course, not approximately. It is in the middle. This is the date of acquisition. Date of acquisition. Date of DOA represent date of acquisition. How many shares we have? How much? How many shares we have bought? 80%. So 80% shares were acquired. Okay. Now, beta, this is the graph of B Limited. Okay, beta. Now, question is also giving you the profit and loss figure. First, you consider the balance sheet, and in the balance sheet, you are finding the reserve and surplus part. Okay, beta. I am removing all the highlighting point. Now, focusing on the main part to discuss. So, reserve and surplus is there, and we must be focused on the subsidiary part only. So, we are having two balances there. Okay, beta. So, in the graph, we shall also prepare the same in the same way. There are two kind of thing in the reserve surplus at beginning and at year end. We are also having profit and loss. Okay, beta. So both of the balances are there. So we are in the working in the balance sheet. We are finding the closing balances as on 31st December. Those are 1 lakh and 82,000. 1 lakh and 82,000. Okay, beta. Can I also mention this thing in the analysis profit? Yes, but we should wait first. Question is also giving you some more information. See, question is also giving you some more information Question is also giving you the profit and loss account balance of B Limited, showing a credit balance that is the positive figure of rupees 30,000 on January 1st, 2021. So, beta, PNL in the PNL account you are having how much amount you are having in the PNL account 30,000. Okay. At the beginning of the year, there was 30,000 credit balance in the PNL account. It seems the difference is profit or loss, of course, but it doesn't mean for you now, because in the starting of the lecture, in the starting of this chapter, you may think like this, but now you are thinking in the pre and post way, pre and post acquisition. Okay, beta. Now, coming to the next part of the question. One more thing is also there. Question has not mentioned anywhere the general reserve balance. This is the concept. If nothing is given, then it is always presumed that the reserve are from beginning. If reserves balances are not given, then always we presume that reserves are right from the beginning. The same balances are in beginning. Okay, beta. So I am also mentioning the same thing in the analysis of profit. Okay, beta. Basically, graph is just showing to analysis of profit, beta. So we are able to see here that the balances of general reserve were from beginning 1 lakh. There is no change in the post acquisition period in the general reserve. There is no transfer from P&L to general reserve during the post acquisition period. One more thing is also there. That is, in the case of profit and loss, we are having how much amount? That is 30,000 balance. Yes, 30,000 balance is there. It seems that 50,000 we have earned during the post acquisition period. But you already know that this is not the post acquisition period profit. Since you know, up to the 1st July, the profit has to be shifted here. Up to the 1st July, the profit has to be shifted here. I am writing here up to date of acquisition 1st July 2021. Okay, beta. So from 52,000, we have to shift from here. Sir, this chapter is important. From which perspective? More theory or more practical? But more practical, of course. But you know, without the theoretical knowledge, you cannot do question here. Anyways, now coming back to the graph. The graph is just showing how we should solve the question in analysis of profit. Now, I am also moving to the further part of the question. It seems that there is no change in the general reserve. It seems like the difference of profit and loss is 52,000. That is belongs to post acquisition, but we have to classify the things according to the requirement. Because 6 months are here. Yes, because this is the date of acquisition is 1st July 2021. What is the date of acquisition? 1st July 2021. That means 6 months are in pre and 6 months are in post. I don't think so. Till this, there is any problem. Now, I'm gonna ask you one thing. Beta, question is saying you one thing which is very, very important regarding the dividend. Question is saying out of which, what does it mean? Out of 30,000 or no? Tell me fast. Everyone, I am waiting for an answer. Question is saying the dividend has been paid 10% on 1st August. Out of which means out of 30,000 or not? Is this clear to you or not? Tell me, everyone. I am still waiting for your answer. I am waiting for your answer. I know there may be some problem if you are not focusing on that. So that's the reason I'm asking you again and again. Yes, sir. Of course. Definitely. Please write down on the question. This will be pre-acquisition dividend. Irrespective of the period to which dividend belongs, if those are saying that those were distributed out of pre-acquisition, that it means clearly saying pre-acquisition dividend. How much is the dividend? It totally depends on the nature of dividend. It is a final dividend or interim dividend. I already told you, until and unless clearly saying interim dividend is always final. And if this is a final dividend, who is paying? Think in the same way, whatever I am telling you. Beta, I am giving you way. Please think step number first. Dividend is final or dividend is interim? Answer is dividend is final. Who is payer? S limited is payer. Okay, now at which this percentage to be applied? Since it is a final dividend, so it is to be applied on the balance sheet capital of last year, because this dividend is final, so it belongs to last year. And final dividend is always calculated on the paid up share capital of the balance sheet date, of course. So is there any further change in the share capital? No, there is no change. It means the share capital which is in the balance sheet is still same. So share capital, I am writing here share capital. How much is share capital, beta? You have already covered. Share capital is 2 lakh. Oh. So it means 2 lakh rupees is share capital. Then it means on July 1st, this is the date, July 1st, while dividend was distributed, I would like to say final dividend was distributed 10%, that is rupees 20,000. On 2 lakh, you will apply the percentage by 10%, that is rupees 20,000 is your dividend. So I am going to ask you one thing and you will be able to answer. Yes, beta, Hitesh, if nothing given, then always it is presume, not assume, it is presume final. Okay, beta. See, tell me everyone, from where such figure has been reduced, from such 30,000 or from such 52,000 difference, from where you are seeing the figure that has been reduced. Such, although such to be distributed from 30,000, but from where the deduction has been made in 52,000, if we are finding the 52,000, that is after dividend or 30,000 is out after dividend. Tell me first. You know, the date of deciding the dividend is July 1st. Tell me everyone, I am waiting for your answer from Die Hard. बिल्कुल मेरे को अभी बताओ कहां से ये घटा है? From where it has been deducted 20,000, that has to be added back. Siddharth, that is receiver point of view. That will be covered later. Don't worry. First, you have to answer this one. Tell me everyone, from where that has been deducted. Very good answer. Not even a single answer is wrong. Still, I am waiting for other answer to other student to answer. Please answer me. From where that has been deducted. I want answer from all of you. This will show the clarity of your concept. The 52,000 is there. That is the difference of opening and closing balance. The dividend was decided on 1st July. That okay, let's start to distribute. That must be from 30,000, but 30,000 at the time the decision was not taken. Then of course the dividend has been reduced from 52,000. That's another thing that must be reduced from 30,000. That should be reduced from 30,000, but at that time decision was not taken. Okay, the decision of dividend was taken in July. Of course, 30,000 is not the figure from where the dividend has been deducted, even though that must be deducted from there. But how that can be deducted if the decision has been taken on 1st July? Okay, beta, Namrata, please focus on that. So 52,000 is the amount from where dividend has been deducted. So beta, please do this thing. Add it back first. Add it back first. Add dividend from where such has been deducted. Beta ji, this is the way to solve. Dividend I'm not writing here final dividend. You know the final dividend. Okay, beta. So I'm gonna write here that the dividend must be adjusted back. Okay. First, I am giving the figure below the line: 30,000, 10,000, nil. So where the dividend has been deducted? Dividend has been deducted from 52,000. So dividend must be added back. Final dividend must be added back to 52,000. First, you add from where the figures have been deducted. Okay, G, okay. Is there any further adjustment regarding the bonus or abnormal loss? Okay, read the question. We shall apply the time adjustment and later on we shall reduce it from 30,000. Okay, beta. From where that has been deducted, we have added back. That's another thing, that from where this should be deducted. That's another thing. We shall do treatment according to that. That where is written dividend is decided on 31st July. Beta, see what the question is saying. Question is saying, beta ji, see, focus on this. I am writing, highlighting the with the yellow. Question is saying dividend 10% was paid on this date. Okay, beta. It clearly implied declared and paid on that date. This is the final dividend. Final dividend is declared, not proposed. Okay, beta. So I am now focusing on the rest of the part of the question. Receiver part, on the receiver part, this is given, but I will read this later on. Is there any adjustment further before the time adjustment? C. Is there any further adjustment, bonus or abnormal loss? No. So please do this and time adjustment also. Okay, G, okay. First add back from where such has been deducted. First add back from where such has been deducted. 10,000 is same, 30,000 is same. Okay. So 72,000 was the profit earned during the post acquisition, but now we have to apply the time adjustment since total 72,000 is not the profit belonging to post acquisition. 6-month profit must be shifted back to pre. Okay, I'm repeating the dividend part. Beta, I'm asking you one thing. The dividend has been paid on 31st July. Okay, beta. Dividend has been paid on 1st August. 1st August. Dividend has been paid. Now tell me fast, is this final dividend or interim dividend? Of course, it is final dividend. It was decided on which date? Answer to yourself. It was decided on which date? Sir, it was decided on 1st August. Since question has not given any other date, it means it was decided on the same date. So it means that was not the pre-decided on 1st January. That was not pre-decided on 1st January. The decision has been taken on 1st August. It means on the 1st August, yes, beta, final dividend. On 1st August, the dividend was decided and paid. At the time, on January 1st, 2021, while we were seeing the balance of 30,000, at the time, decision was not taken. So 30,000 was not reduced. So I am finding first from where figure has been reduced. Of course, the later 52,000, which it seems during the profit, that is the thing from where, that is the amount from where such dividend has been deducted. First, we will add back. Okay, beta, Namrata? Yes. So, Namrata, beta, see, in 52,000, such profit, such dividend has been reduced, of course, because at the time 30,000 January 1st, that decision was not taken. So, decision was taken on 31st August. 31st August is the date. Sorry, 1st August. On 1st August, the decision was taken. It means this was decided on this date, not at the date January 1st. So if that decision was not taken on January 1st, then how 30,000 can be reduced? Okay, that's another thing. We have to distribute it from the pre-acquisition because it belongs to pre-acquisition, but the figure was not reduced from 30,000. Yes, figure was reduced from this total 52,000 which belongs to full year. So this figure 52,000 is after reducing the dividend. So first we have to add back so that we can find out the total profit of the year, and that profit first must be divided into two parts based on the time adjustment, pre and post. And when you will be finding the correct profit of pre period and post period, only then after that you will decide is the amount sufficient to reduce dividend part if the in the same way. Okay beta, let's do it. So apply the time adjustment first. What is the time adjustment, sir? Of course 6 months up to 1st July. Okay beta ji, come on, shift that 72,000. You are not the post execution part only. Out of you 6 month period profit belongs to pre. So please go there, and pre profits are inviting him that please come here, you belongs to here. And after that you will be able to find out the correct profit of the all the period 10,000. It means 66,000 profit belongs to here. So you will be able to find out the correct profit, that is 36,000, that belongs to post acquisition, and 76,000 total figure of pre-acquisition profit is there. So now, is there any further adjustment? No, except revaluation. Revaluation is to be done at the time of at the last of the question. Okay, beta. Yes, beta ji, Namrata, you are right, beta. Very, very good. Yes, Namrata, giving a clap. I could be able to make you understood. Very good, beta. Although other students are also doing the good things, but sometimes, like me, I always found a student which is very, very depth manner. Okay, beta. You will be now forgetting this thing, beta. Beta, you are right now this. Okay, beta. Now I am feeling happy that I could able to make you understood. Beta, now reduce the dividend, beta, everyone. Now reduce the dividend from where that should be deducted. Sir, question is saying don't say from where should. Okay. And question is saying that has been distributed out of pre. Sir, how can you decide? Oh, beta, I cannot decide. Sorry. If question has told you clearly that must be reduced from pre, although it belongs to pre, and if I could decide, then also I will be reducing from the same. But still, while question is decided, then you cannot have the choice. Okay, beta? Everyone, now reduce this dividend from where? From the pre-acquisition part. So 20,000 must be reduced from pre-acquisition. So what is the profit immediately after dividend adjustment? These are the figures which we are finding here. Now, beta ji, there are two things. Number one, on the receiver part, 1 lakh. Oh, sorry. That is 1 lakh. Yeah. I did mistake in writing a zero. It has been 1 lakh. So it becomes 1 lakh 66 and 1 lakh 46. Yes, beta, right. So by mistake it was written. Anyways, now come back to this. Beta, after that, we have to do the revaluation adjustment. But before revaluation adjustment, I want to do the receiver part adjustment from this. Now tell me, subsidy is paying 20,000 for holding purpose. This 20,000 was pre-acquisition dividend, since it was distributed out of pre-acquisition profits. Beta, how we should account for in the books of holding company? In the books of holding company, these must be accounted for as recovery from the investment. But as you know, as I discussed earlier, that it is presumed that holding company accountant has done mistake and he has credited to the profit and loss account. So first we have to rectify that must be reduced from here. Holding company accountant, why you have done mistake? Why you have done mistake? 57,200 profit is there, a limited. So that must be corrected first. Okay, beta. The pre-acquisition dividend income which has been credited to P&L, that must be reversed. So dividend, how much dividend we are getting? Sir, 20,000 is total, but 80% is yours for holding company. Oh. It means 16,000 is the figure which we have to correct. Oh. So first we have to reduce from the P&L from where it has been credited, and that must be reduced from the cost of investment. So the correct cost of investment will be after this pre-acquisition dividend. So we have to reduce first 16,000 from here. Only then we could be able to find out the correct figure of investment that has to be compared. So 3,40,000 minus 16,000, it becomes 3,24,000. Yeah, because he is not CA, so he made mistake. Yeah, very good. Anyways, now I am asking you one thing. Give me a thumbs up that if you are clear till this point. After that, we shall do the revaluation adjustment. You know, these are very easy concept, but only the things to be done in the proper manner, in the easy manner, in the slow manner. Give me a thumbs up if you are clear till this, everyone. Namrata, especially beta, you tell me because you are having doubt. That's the reason I am asking you again and again. So other student, please don't take why you are asking only to Namrata, why not to us? Because any student is having, even if even a single student is having doubt in my class, then it will be my defeat. Each and every student must be covered all the concept beta. It is duty from the bottom of heart of a teacher. Anyways, okay, everyone, okay, beta. So now, beta, we are now focusing on the another part of the question, that is. So I am removing rest of the highlighted point from here, so that you must be focused on the rest of the part of the question. Okay. Okay. To give a giving a highlighter which you have already covered in this way, so that you may not be focused on that. Now I am moving with the another color highlighter. Okay, beta. The plant and machinery which stood at rupees 1,50,000 on January 1st. See, question is now giving you one more thing about the revaluation. Beta, remember revaluation adjustments are done at the last of the analysis of profit. So question is now giving you one more thing, that is, so can I remove this 52,000 so that other adjustment we can done here? Okay. But the plant and machinery account balance is given here as per question, that is on January 1st, 2021, it was 1,50,000. It was 1,50,000. 16,000 adjustment you could not understand. Okay, beta, wait a minute. Here, beta, before moving to the next part of the adjustment, I am again discussing the 16,000 dividend adjustment. Wait a minute. Beta, see, I am removing this plant and machinery. Now, still focusing on the dividend part. Hirel, beta, that's the reason I am asking again and again. Everyone. Hirel Babu, up now, I will move to the next part only after your answer that you are clear. So, beta, see, 20,000 is the figure which has been distributed out of pre-acquisition profit clearly given by question. It means this becomes pre-acquisition dividend. Okay, beta, this becomes pre-acquisition dividend. Okay, Babu. And how much amount holding company will receive out of such 20,000? If subsidy is giving totally 20,000, come on, shareholder, take this dividend. But out of such shareholders, 80% shareholders are having from us side. Okay, beta, from our side. That is, we are the 80% shareholder. That means out of 20,000, 80% dividend will be ours. That is 16,000. So we shall do the treatment in this manner. 16,000 must be accounted for as bank account debit to investment, because it was the concept which we have already learned in the chapter investment. 16,000 must be accounted for in this way. But what accountant has done? He has done, although he has not done mistake, rectification of error is there. What should be, what has been, this is what has been, and what should be, that is bank account debit 16,000 to, can I credit P&L because income has been shifted to P&L? Yes. What has been, wait a minute, sorry, this is what should be, this is what should be, this is what should be, wait a minute. Oh, what should be, this should be, and this is what has been. The accountant of holding company has shifted the figure to P&L. So how we can rectify? See, there is no mistake in bank account. Beta, how we can rectify? Beta, we can rectify by debiting the P&L. This is the rectification of error entry. P&L to investment. Okay, beta. In this way, we can rectify the mistake. 16,000 must be rectified by the holding company in this way. So P&L of holding company must be reduced by debiting. We did that, and investment must also be reduced. So beta, see, here is consolidated reserve and surplus, from where P&L of holding company has been reduced, and also the investment account has been reduced. Beta, now I will move to the next part of the question when Hiril will answer whether he is clear or no. Beta, Hiril, let me know whether you are clear or not, Babu. Only then I will proceed to the next part of the question. Gayatri saying crystal clear. Hiril beta, please answer. Absolutely perfect beta. Hiril beta, please answer. After satisfying you, only then I will proceed to the next part of the question. This chapter needs more lectures, more effort, more practice. In the limited lecture, I have to answer all these things. So if I am, but still, if I am practicing with you, even a single question, that must be 100%. Now, sir, now clear concept. Thanks, sir. Okay, beta, here. Okay, Babu. So I am removing this thing, the discussion we have written here. Okay, Babu. So beta, now moving to the next part of the things, that is revaluation part, the main part of the question in addition to dividends. So please be focused. Now please put your pen down and see what I am saying. Please put your pen down since I have very limited time. So please do this thing that you can note from the YouTube video later. Beta, on January 1st, 2000, wait a minute, I will highlight again. So see, the plant and machinery book value has been given 1,50,000. Until and unless market value or worth has been given, always it is clearly given by question, there is book value. On January 1st, 2021, they are saying there is a plant and machinery which are having the book value here as rupees 1,50,000. As per the question, they are saying that is 1,50,000 here. Okay. But we have to check the market value of date of acquisition. We want this. Here what we have to do, we have to compare the book value with the market value. And if there is any difference, only then there will be either capital, profit or loss, etc., etc., revaluation profit or loss. Now, Betaji, what they are saying, considered as worth rupees 1,80,000 on date of acquisition. First July is your date of acquisition. So question is giving us the market value here is 1,80,000. Oh my God, it is very, very easy. Question is giving us the market value on this date. Very, very easy. Now we have to find out only one thing, the book value of the date of acquisition. And for that we need the depreciation rate, starting 6 month depreciation. If we calculate, then after reducing that depreciation, we can easily find out the book value on the date of acquisition. Very, very simple. So beta, what question is saying? Is the question giving us the depreciation rate? Yes, question is given. They are saying figure is to be considered while consolidating. Even if question is not saying this line, still we have to consider for the consolidated purpose. Okay, beta, for the consolidation purpose. The rate of depreciation on the plant and machinery is 10%. Okay, beta. Very, very easy, very, very easy, very, very easy. On the basis of useful life, that means SLM. Oh. So, beta, please use please reduce depreciation here in books. What depreciation was charged in books? So 6 month depreciation 1,50,000 multiplied by the rate is there, that is 10% per annum. Okay, multiplied by 10%, multiplied by 6 divided by 12. That means there is depreciation of 7,000 was the depreciation which has been charged during the first 6 months. It means the book value on that date, sorry, 7,500. 7,500 was the depreciation which has been charged during the first 6 months. It means the book value on the date was 1,42,500. So later on also 7,500 was charged and the book value was 1,35,000. So that has been included with the other plant and machinery in the balance sheet. We do not need to take tension. So don't say, sir, although it has clearly given this 1,35,000, sometimes you will not be able to find the figure same 135,000. It means the other plant and machineries are also there in the balance sheet. Please consider this. Be focused. So this 135,000 will not always be matched with the calculated figure. It means there may be some other plant and machinery there. Okay, beta. So please don't compare this thing. Although I have compared just to make you clear. In this question, the figure is matching, so I compared that. Okay, beta. So now what I'm saying, beta, in the books, 7,500 has been charged in the post of acquisition. So we need not to take tension. We need to be focused on the things. Those are, what is the capital nature profit? 142,500 must be reduced from 180,000. That is 37,500 will be revaluation profit that has to be considered as pre-acquisition profit because it is having the capital nature profit and that must be added to the pre-acquisition profit. But on this additional depreciation that has not been charged, on the book value 142,500, that book depreciation was there in the post acquisition. We do not need to calculate again. Although I calculated just for make you simple. But on the additional part, you have to calculate the depreciation. That must be additional depreciation during the post acquisition period. 10% into 6 divided by 12. 10% into 6 divided by 12. That is 1,875. So beta 1,875 is the additional depreciation which you need to consider. So now we are here posting these things in the analysis of profit. How you will post? You will add 37,500 in the pre-acquisition and you will reduce the depreciation 1,875 in the post-acquisition. Very, very easy. Also, there must be adjustment in the balance sheet. In case of revaluation, you have done in the partnership, you usually forgo. After posting to the revaluation account, you usually forgot to post the things in the balance sheet. So first complete that step. So that you cannot be able to forget. In the plant and machinery, what you will do in the balance sheet also, along with the pre-post acquisition, beta ji, You will post here 37,500 will be up plus figure, plus figure, plus figure, because this is profit figure. Oh. Now you will reduce the depreciation, additional depreciation, that is 1875. So tell me what will be the net figure to be transferred to outer column. Wait a minute, one thing is also there. Those are considering. Yes. Okay, beta. And they are charging the depreciation in different way. That is, they are considering the SLM. Anyways, still we have to calculate in this way. Beta, this mistake should be corrected in the study material. Anyways, please do this in this way. 37,375 plus 37,500. Please do this. Whatever I am writing here. Okay, beta. This should be done. Now, 410,625. Okay. 2,03,30,30,000 यहाँ पे हो गया. Okay. Now we are also now shifting to this one, the figure. Beta, the answer is slightly some different from ICA study material. The opinion are different, and definitely this is the correct answer which I am writing here. So I am not saying contradicting in any way. So please do this in exam. Add capital profit, the revaluation profit, depreciation once again. Yeah, doing that. Okay. Revaluation profit. Beta, study material has charged depreciation in different way, but we must do in exam in this way. This is the correct. Okay, beta, this is the correct thing. 37,500 must be added back to the pre part. Okay, beta. And additional depreciation we have to reduce on 37,500 multiplied by 10% multiplied by 6 months. What will be the figure? 37,500 multiplied by 10% multiplied by 6 divided by 12. That is, of course, 1875. Okay, please do this. Not 1,500. Okay, now what is the final answer for this? After that, we shall also segregate the things in the holding, and we shall also apportion the things in the holding and subsidiary part. Please do this. 1 lakh and then 46,000 plus 37,500, that is 83,500. No, beta, no, not at 80%, beta. 80% is our share, but the assets is depreciated full now. So depreciation in the analysis of profit is always to be considered, of course, on 100% asset, because profit is here being calculated first 100%. Okay, beta. Don't say 80%. Okay, beta. That is not the correct. Please. Okay. Now what we are 1875 must be posted below the P&L. 1875 1875. 3,60,000 minus 1875, that is 358,125. This is the correct profit or loss. But now this profit or loss should be a portion between minority interest, that is 20%, and also holding company, that is A Limited. Beta, don't do depreciation 80%, 1500, please. Profit is being calculated 100%. Okay. Anyways, 20,000 and 83,500 multiplied by 20%, that is 16,700. Which one, Namrata, beta, which one to summarize? Yes, definitely after doing question, I will definitely summarize. 358,125 multiplied by 20%, 71. Wait a minute, I think figure is wrong. 36,000 minus 1875, that is 34 34 125. Better do 20%, that is minority part. How much is that? 6825. Okay, 6825. Please do total for minority. This is the minority part. 43525. Yes, better. 43525. Namrata, let me know what you want to better explain. 80,000 is there. 83,500 multiplied by 80%. That is holding part. 60. This must be shifted to cost of control working note number 1. And this is the figure 34,125 multiplied by 80%. 27,300. This must be transferred to working note number 3, consolidated reserves and surplus, and this figure must be transferred to minority interest working note number 2. Yes, beta. So can I shift them? Okay, one by one. First, you please post to minority 43525, 43525, 43525, 43525, 43525 plus 40,000 is there. That is 83,525. Can I post it to balance sheet? Yeah, we can easily post to the balance sheet. 83,525. Now moving back to the working notes. Again, coming back to the analysis of profit. Now, where to post? Now, we have to post in working note number 1 and working note number 3. First, I am doing working note number 3, consolidated reserves plus 27,300. Okay, beta, in P&L. So, from subsidy, the post-acquisition profit is there. That is 34,125. No. The figure was 27,300. Okay, 27,300. 27,300. So 27,300 plus, sorry, do this 2,40,000 plus reserve is not there. So in the outer column, 2,40,000 will be the final figure of general reserve, since nothing was contributed from subsidy side. In this figure, 57,200 minus 16,000 plus 27,300, that is 68,500. Again, check this. 57,200 minus 16,000 plus 27,300, that is 68,500. Please do a total and post it to the shareholder funds. That's 2,40,000 3,08,500 is total that has to be posted to the reserve and surplus. So in the shareholder funds, the reserve and surplus is their total that is 3,08,500, and now the total becomes 8,08,500 that has to be posted to the balance sheet. Please post it to the balance sheet. That is 808,500. Okay. Now coming back to the rest of the figure in the working note, that is working note number 1 only, where we have to post the pre-acquisition reserve and surplus figure, that is general reserve and P&L. Okay, beta, 80,000 and 66,800. First one is general reserve. In the pre-acquisition, there is general reserve and profit and loss. General reserve is 80,000 and P&L is 66,800. So the total becomes 146,800 is total pre-acquisition profit that has to be added to the capital part, that is 306,800. Now the difference is there, that is 17,200, that is your goodwill. This is your goodwill. So please post this goodwill to the balance sheet. In the non-current assets, intangible assets is there. Intangible assets. There you have to mention here goodwill and give a working note reference in exam. And what is the goodwill? That is 17,000. That is 17,200. Please do a total. 757,75825. That has to be posted to the balance sheet also. 757,825. Now, is there any pendency regarding the working note? First check working note, then notes to accounts. Goodwill posted, minority interest posted, consolidated reserve and surplus posted, analysis of profit posted. Now coming to the notes to account, non-current assets posted, current assets are there to be posted. 278,700. 278,700 and current liabilities are also there to be posted. 144,500. 144,500. Please do a total. 1,036,525. 808,500 plus 83,525 plus 144,500. That is 10,36,525. Balance sheet is tallied. I will upload this PDF. Don't worry. I know you need this. Okay, beta. Okay. Nisarji, I will WhatsApp. Anyways, I will upload myself. Anyways, beta, everyone, tell me fast. Everyone, is this clear to you all? I am still waiting for your answer. I will upload this PDF with lecture with name lecture number 4. Okay, beta. While you will be finding the figure, sorry, PDF, you will be finding the lecture number 4 name. Okay, beta. Still waiting for your answer. Is there any confusion? Are you clear? Beta, tell me fast. I am still waiting. Ekdam super clear, sir. Clear, sir. Yes, sir. Only 3 students answer. Rest of the students are enjoying parathas and dosas, etc. This is 29. Yes. Now, although the chapter is complete, but still, but in this you will find the previous all the PDF also. Okay, don't worry. I am just uploading. Wait a minute. Otherwise, maybe I could be busy at anywhere. In that case, you will big problem. Uh, Wait a minute. And done it. PDF has been uploaded. Now you can check there, beta, and tell me fast, everyone. Is there any problem? Yeah, lecture number 2 and 3 also has been covered in the same PDF. Don't worry. In the lecture number 4 PDF, all the previous PDF are also there. Don't worry. Be bindas. Jackass bindas. Okay. So tomorrow last lecture, if possible, please take extra time. Also ready to cooperate. Beta, yeah, I know, but only ICA can do these things. Okay, beta. I can see PDF. Okay, Siddharth has downloaded the PDF. All answers are visible, sir. Yes, beta. Okay. Okay, then I'm now closing today's session. Okay, bye bye. Take care. I want one thing. Whatever you are feeling, you can show me your feelings by giving a Google review. But can you please give me a Google review? You can search at Google and you can give Google review. That will always be memorable for me. Okay then, bye bye. Bye, बच्चों. SRT class